Welcome to Bits of Wisdom, offering insights on money, Bitcoin, and the world of exponential change. Hello, and welcome back to Bits of Wisdom. My name is Paul Rogers, and this is episode 2 of our foundation series on money, our monetary system, and Bitcoin. In this episode, I'm going to tell you a little bit about me and my background and how I came to be on this journey. I'll share with you some of my moments of awakening into understanding that we have a problem and how I came to look around for solutions. And that took me down the rabbit hole, as the Bitcoiners like to say, of researching and understanding Bitcoin. And in this series, I'm going to try to condense a lot of the information that I learned and in my background to share with you so you can make better investment decisions. So before we get started on how I got down this journey, let me tell you up front that I'm not selling anything and I'm not providing financial advice. That was my past profession. Here, I just want to educate and inform you. Now, there are a lot of experts in the fields of economics, monetary policy, and technical matters surrounding cryptocurrency, Bitcoin, and the cypherpunks who provide a lot of great information. But what I found is they may not always resonate with the average investor. My objective is to provide a forum and to be a voice to help a wide swath of people better understand our financial and monetary systems, the potential use and benefits of Bitcoin, and understand the opportunities presented by the exponential change that we're going through. This is not something I ever anticipated doing. So how did I get here? Well, I spent the last 2 decades as a financial advisor and a former certified financial planner, first with a very large national brokerage firm, and then owning my own independent practice with the largest independent broker-dealer in the United States. I help thousands of regular people, from teachers to nurses to engineers and doctors, invest in conservative traditional asset allocation portfolios. I manage many tens of millions of dollars on behalf of my clients. And I spent my career researching and educating people on how to invest their money for retirement and how to manage the money to keep pace with inflation, and ultimately to use it to fund their retirement so they wouldn't run out of money before they ran out of life. Now, I counseled people on very prudent and conservative age-old principles. Things like don't spend more than you earn, fully fund retirement plans, invest on principles and not predictions. Investing is not Las Vegas. Buy quality investments, hold them for the long run, be well diversified, and don't take on more risk than you need to. And these principles worked well for decades. And these common sense principles made sense in the environments that we've been in for many years. But things have been upended. Now, what I found in working with lots of people is that most people wanted to be able to save money for the future and not lose it, either to inflation or by taking too much risk. They knew they needed to invest, both because they wanted to preserve the purchasing power of their savings over time in the face of rising prices, and because by investing, they hoped to not only maintain, but potentially increase their purchasing power. Most of my clients, again, regular folks and families, were very concerned with losing money. They weren't interested in gambling with their life savings because they knew they would need it. They weren't trying to get rich quick, they just didn't want to die poor. If you think about it, for a long time, you could save money in a bank and get a decent rate of interest. But we've experienced a 40-year bull market in bonds as interest rates have continually fallen. Now, bonds had provided a viable alternative to more volatile and risky stock investments. And so there was the evolution of the classic balanced portfolio, 60% stock and 40% bonds. And that worked well for many, many decades. But as the saying goes that everybody knows, past performance is no guarantee of future results. And that's sure true when so much in our system has changed. So what do we do? What if there was a new asset class that could provide some benefits compared to traditional investments? What if it happened to be by far the best performing asset class over the last decade? Wouldn't it be worth taking a look? Now, this all hit home for me when I decided that traditional financial planning no longer served my passions, and so I sold my practice to pursue other interests. I'd done planning for my wife and I, and with some adjustments, it looked like we could make this work and not run out of money before we ran out of life. And then all hell broke loose. I happened to be in India at yoga teacher training of all things when the pandemic really broke and the lockdown started. I got back on a repatriation flight to a new world order. Little did I realize how much was going to shift in the next year. So I had some moments of awakening and realization that we had some major problems in our system. I had sold my business, so I had some cash to invest right as COVID struck. Now, there was some uncertainty with me personally as to how my wife and I were going to live the next decades of our lives after having recently moved to a warmer climate. And there were certainly huge disruptions in our global financial system. Stocks had tanked, the economic ramifications of the lockdowns appeared to be severe, yet after tanking, stocks started going up and seemed to continue to rise to rather expensive valuations. Now, the bond market, the normal safe place for money, seemed pretty clearly a losing proposition. I mean, it's not complicated math to know that even at a stated 2% inflation rate, if you're earning 1% yield on your bond, you won't be making money, just losing it slowly. Real estate prices had gone through the roof. We took the plunge after we moved and bought a house. Although we had to pause and think, with this collapse, and many people not even being able to view houses, would real estate prices go down? But things were stabilizing and beginning to go up. Now, there was talk that part of that was because people could now work remotely, they were working from home, and so home was a more important place, and more people were spending money to upgrade the lifestyle in their homes. So we bought a house. And we love our home. But less than a year later, we saw that the value of our home had gone up nearly 25%. So on one side, that seemed like a great investment. And I could pat myself on the back and say, Paul, you really know what you're doing here. You made a great investment. But then I had this moment of awakening. The other side of that is what that really means is if I had waited, the purchasing power of my money would have declined 25% to buy something that I wanted to buy, like a real asset, like a house. So, $100,000 turned into $75,000 worth of purchasing power. $500,000, less than $400,000. So my inflation rate was huge. Now, this is a problem. It means that any cash that I have that didn't go up 25% lost purchasing power. The safe money wasn't going to do that. Throughout the country, real estate prices going up 20%. In our county in 2021, condo prices went up nearly 29%. That's insane. Something, and I don't even recall what it was, made me start exploring and learning about Bitcoin. Now, of course, I was aware of it, and clients had occasionally asked me about it, but I thoroughly dismissed it. I even recall posting humorous video ridiculing Bitcoin on my business Facebook page. And when my wife had asked me about it years ago, I reassured her that the financial system was fine and Bitcoin was a fad, and we didn't need to be involved in it. Well, another lesson, she's often right. But in my defense, it wasn't clear what it was trying to be at the time, the problems it could solve, or if it had staying power beyond a small group in cyberspace. Little did I know that I was on the verge, with all these things going on, of going deep down the Bitcoin rabbit hole, as it's popularly referred to as. So join me for the next episode, and we're going to start to really get into it. Again, I'm Paul Rogers. Thanks for joining me at Bits of Wisdom. We'll see you next time.